Q3 ends on a whimper, negative for the quarter, something we have not seen this year. What do we see as we head into Q4? Well, inflation ticking up again, growth slowing. How about what's going on in the options market? Are you aware? Do you realize it is affecting the overall market? So, as we head into Q4, lots to talk about, so sit back, let's go. Hello, this is Michael Loftus for Wealth and Wisdom TV, where education is the key to a successful financial future. First time here, I'm a practicing financial advisor. We have a registered investment advisory firm, meaning we do act as a fiduciary. Also, what you see and hear here, we do apply to our overall models. Besides these market updates, we're doing podcast educational videos and launching a new weekly podcast, well, maybe weekly, but weekly wisdom podcast coming up shortly. So please do consider subscribing, hit that like button, and we hope to see you again after today. So let's get started. What are we talking about in that opening, right? We're heading into Q4, seasonally one of the most difficult times of the year, right? We saw a downturn in Q3, haven't seen that in a while. A lot of deterioration, volumes clicking up, right, as the markets go down. Not a good sign. Talked about inflation up, growth down. That is stagflation, okay? Where do we see that as we go forward in our models? And also, how will we be positioned? So as always, okay, we're going to go through the cycles, what we see. We're going to talk about options this time, something new in our process, and then go to the technicals, the charts, to hopefully give you a clearer direction. So let's go to the big board. Okay, kicking things off, if you have not been here before, we have a multi-step process. We're going to go through that. We talk about market cycles. We've added in options, going to talk about why and how that is really important. And then the last thing is the charts, which really gives us an idea of where momentum is going. So, kicking things off, we look at our cycles, okay? 4 different cycles, like the 4 different seasons, okay? Based on growth, inflation, and policy. We made the move from cycle 4, although that's kind of an overlying theme, to cycle 3. As I said in the opening, growth slowing, okay? Going to talk about that. Inflation accelerating, which is called stagflation, okay? So that's an issue. So let's dig into it just a little bit, okay? Now, we've got 28, 29 different factors here, but I'm just going to show GDP, and you can see what happened, right? How we were rising last year, and then we started coming down, right? That was 2022. And then this year, okay, the first thing was in the first quarter, that really took us by surprise. Going to talk about why in a second, okay? But here in the third quarter, we're going to see an acceleration of GDP. So wait, you just said growth is slowing. Well, this one's kind of an anomaly, and I'm going to explain why, okay? What happened was, one, we've got government spending. So talk about the Fed in a second. I'm talking about the Treasury printing a lot of these different programs, and you can see we soared over 11% in the last quarter. Wasn't in our model, okay? So that was a little bit of a surprise, to say the least. And I kind of joke here, right? Taylor Swift holding up the economy, but that is consumption. Not just Taylor, Beyonce, Barbie. Okay, when you look at what's happening in the last quarter, really big numbers, okay, as far as consumer consumption. And at the same time, rates were still below 7 as we started the quarter. You also had oil that was lower. Now we've surged 30+% on oil, okay? So several factors went into what we call a one-time anomaly. And then, if I were to go back to that chart, we go negative over the next 2 quarters. So growth, going to continue to watch that as we go forward, right? So inflation. All right, now this is PCE, which came out last week, the Fed's favorite indicator, okay, and it went up 3.48%. Now, everyone's like, okay, wait, what's going on here? So interesting, this weekend, the Wall Street Journal had an article, why consumers matter about inflation even though it is falling. Because when we look at this, right, you see that falling, but that is rate of change. That is not actual inflation, right? So when we're up here at 9%, that means it grew that month at 9%, okay? So across the board, I'm not going to get all the numbers, but obviously we're feeling it still with groceries. We're feeling it now at the pump as oil continues to go up. Orange juice is at its highest price in history, actually. So again, I could go on and on. So we're still feeling inflation for a while. Won't really change until we see some kind of move or deflation as we go forward, okay? And then you have the Fed. All right, so you've got the Fed, Powell, right? Soft landing is not in my baseline. Christine Lagarde, right, from the ECB. Same thing, right? It's like they kind of wrote the memos together. Recession is not in their baseline. Well, let me tell you, Europe is already in a recession. There's no question about that. Germany put out a manufacturing this number, lowest in history, 39. That is a depression type number. So the Fed is over here, right, and they're continuing to raise. They did pause. And we'll see what happens. This soft landing is really interesting. And this whole quarter is going to determine what we see going forward, right? Is there going to be, quote unquote, a recession, that true downturn that a lot of people are talking about, right? Because everyone is waiting for what? The pivot, not just the pause, the pivot. Quick reminder here, I'll zoom in on the chart, and you can see right down the bottom is the Fed. And each time they pivot, go up, look what happens to the market. Now, there's a couple things around that, not showing the chart, but I always talk about yield curve, 10-year minus 2-year, right? When it goes negative, it's been negative, but now it's starting to steepen, go up. Same thing, right? When Fed cuts, when yield curve steepens, the market rolls over. So again, to be determined, going to continue to watch this one as we go forward, okay? So I talked about options. Now, several videos, I've mentioned this and why it's important, but it has really changed how things are moving in the markets, okay? Now, I can't give a long presentation here, okay? This is new to our process. We've had to get on top of this. Working with a company called Tier 1 Alpha. You can look them up. Great follow on Twitter as well, right? But basically, the options market, when you see, one, you have what's called ODTEs, mentioned in, same-day options, okay? Over 50% of the flow in the options market, which was essentially nothing just a year and a half ago, okay? And then the options market as a whole, okay, is doing more volume than the actual stock market. So it really has made a difference, okay? And this is just one chart here that I'm showing from Tier 1, okay? And what you see here on the chart, and I'll put an arrow there, but on this side here, that is what's called negative gamma, okay? So when you see that, going to have to look up some of these terms, okay? But basically, when you have negative gamma, okay, there is a push to sell. Okay, and the thing is, it comes from, as I'm writing over here, some of these vol control funds, CTAs, a bunch of other funds that can move about $15 to $20 billion a day. Okay, so that's why it is so important to follow the flow. So when we're negative gamma, the push is going to be to the downside because these vol control funds, volatility control funds, okay, and again, there's a bunch of different kinds, but I'm going to keep it simple with that. It's all done through algorithms, right? So if the market's down, if you see a 1% move, that could create a $2 billion sale per each of these funds. So definitively have added it to our process to make sure we know exactly what's going on. Tier 1, we get an email every day, obviously paying for this subscription, but probably 20 different slides, a lot of information, and where we feel the market's going to go that day. And this just kind of shows you, right? And this, you see the S&P, but you also have negative and positive gamma, okay? And you could take a look here as we went into the beginning of the year. We did have some positive gamma. Was not aware of that at that time. I was not utilizing the service. but now we're in negative gamma regime. So let's see if this continues, but this will continue to drive the market. Let's go to the big charts. Going to keep it simple here on the S&P with just a couple charts. Okay, so the first thing is obviously you can see the trend and where we are. This is a monthly view. Okay, obviously in an uptrend, then we went in a downtrend. Are we in an uptrend? Well, obviously you can see, right? We reversed. Okay, so we've had 2 negative months in a row now. Starting out the month negative. Again, this is just the first day, so I'm not going to count that, but you can kind of see the flow of the market and again how momentum has changed within the overall markets. But let me zoom in on a daily chart, which is, I think, a little more important. This is the SPY S&P 500 ETF. Couple things top to bottom. We have relative strength at the top. Okay, when I zoom in here, okay, and you can see negative 32. That's really oversold. Okay, now we had that same reading last week. Couple things, right? You can bounce, you should bounce, but you can also crash in oversold conditions. So really watching this closely right now between the volume, between the negative gamma, right? We're going to see what happens as we go forward. So next up, what else do we see here? Well, we're down below the 50-day moving average. If we break 200, then definitely different ball game, okay? The other thing is when you look at the VIX, okay, the VIX has been my little thing here that lets me write, is covering it, has still been somewhat calm, right? We still not have broken above 20, and right here I have rate of change, okay? And you can see a lot of volatility last year, 1, 2, 3% days. We're really not seeing that over here, right? It has been relatively calm all year, okay? And again, a lot of that to me has been driven by some of these options kind of smoothing things out and taking away, not just me saying this, the fundamentals of the market, right? This options and what's happening, the options activity is really driving the market. Anything else on here? Companies above 50-day moving average, only 57 companies. So again, no strength in this market right now, and we can confirm that with the next chart. The next chart is the NYSE, the entire market, right? And you can see it, right? When you take a look here, the blue line, okay, is the NYSE. The histogram is new highs minus new lows. Well, look, we peaked, okay, we've come straight down, and then look where we are with some of the new highs minus new lows. I mean, today we're, big time we are. My little thing here is hiding that, but we are negative, not quite like last year, but as they say, the trend is not your friend. Let's go to Sector Spotlight. Like what you hear so far? Don't forget, subscribe, like, leave a comment below, okay? So, big thing here, 10-year Treasury. What is going on in this market right now? Because this is the topic. I've been mentioning this for quite some time. The most important chart we follow, right? Waiting for it to break. It's doing the opposite. So a couple things. I'm going to move quickly here through a few charts. 10-year Treasury, we just hit a high we have not seen since 2007. The bond market is telling us something, okay? And this is why now the overall stock market is struggling because yields, right, look at that trend, continue to go up, right? We're at 4.67. Wow, have not seen that in a very long time. Showed this last time, 10-year, right? That's your channel. We have broken above that channel in a big way, okay? So looking at bonds as we go forward. And the reason I bring this up, one, we got to be careful. Two is the impact, right? When you look at what's happening out there, if you're a 60-40 investor, if you're in one of those models, you're still holding bonds, okay? So you've got what are called duration bonds, right? And it could be 3 to 5, 7 to 10, 20, 30, okay? In this case, I'm showing TLT ETF, which is very highly held ETF in the bond market, okay? This is based on a 20-year duration, okay? When you take a look at this, zooming in, right? We are minus 45%. Actually, probably is 47 because I updated it here. I forgot to update that. But over 45% negative, okay, from its high, okay. Now, year to date, and I just updated this before the video, minus 18.48%. So duration, 20-year, TLT, EDVs, 30-year. That's even worse. IEF would be 7 to 10-year, not as bad, but all very much negative, okay? So holding those bad apples don't help your portfolio. So want to make sure, we'll see. Is this going to turn? Got a lot of people calling for 5%. I'm out. I'm waiting. Let's see what happens. Need it to roll over to see a trend change. We've been talking about a true growth slow story coming, but as long as inflation stays sticky, that is a big story that we continue to follow. Next up, last month I talked about Japan. I said I really cut my position here. We like Japan because coming late out of the pandemic, but, okay, what's happened is I felt it's very correlated, meaning moving together with the NASDAQ. So we cut our positions here. We'll see. We're at a critical point on the trend, the 200-day moving average. We'll see if we continue with that, but we have 3 different holdings as of now. Now, we talked about inflation picking up. So how do you take advantage of that, right? Meaning own it as we see inflation ticking up. Now, there's a lot of different ways to do that. So for us, we have 5 or 6 different holdings right now with inflation. I'm just showing you XLE, which is an ETF holding energy companies. Now, a couple things. You can see, I talked about this, June, right? We peaked. The trough, we talked about, excuse me, not peak, trough with gas was back here in June, and we've gone straight up since. Now, Friday today, a little bit of a pullback. Not too, surprising end of quarter profit taking. Let's see, okay? The story hasn't changed as far as the inflation story, but we've got XLE, we've got some distillers, we've got individual companies, we have a commodity ETF that is buying all kinds of different commodities. So at this point, it continues to be our largest part of our portfolio. Another one that I'll mention is uranium, URA ETF, and you can see here, it is just taken off in a big way until, right, Friday. Same thing, right? Have we had some big change here in the cycle? We'll see, right? Uranium, nuclear, okay, is what we're looking at. Now, this has been difficult to get into. We took some profits when we hit some highs about a week or so ago. Might be an opportunity to add, might be an opportunity, meaning to add to our position or to add to another position that we've been tracking in this space. But I want to see, that's a pretty big move the last 2 days. I want to see some stability before we do jump back in there. So, next up, what keeps me up at night? Now, rising loan costs are hurting riskier companies. This is all about the credit event we've talked about, one of our themes for this year. Okay, we're seeing it every day in the commercial real estate area, in companies, and you name it, right? It is really starting to happen. Not seeing a lot of big publications, but something we are definitively tracking every single day. U.S. excess savings. So the consumer spent all that money, right, in July going to concerts, but credit card debt went through the roof and savings went down drastically. And there you go. What's the result of that credit card? Losses are rising at the fastest pace since the great financial crisis, okay? The consumer, right? Then you've got the small business owners. These are bankruptcies year to date, up 60% year over year. It is happening everywhere. I mean, we're not hearing about it, but it is definitively. And by the way, this is data. This is pure data, okay? That's all I'm bringing to you. I want to make sure you understand that, okay? From there, let's talk about our game plan. What are we going to do, right? Number one is we're looking for those key levels of support. This might be a tradable bounce to the upside, but ultimately, I think we roll over again, to be determined. But with our process, looking at the cycles, looking at the options market, and then confirming with those charts, we will be making a decision. Inflation assets, let's see. We've had a little bit of a sell-off here the last 2 days. Going to make a decision whether or not we're going to add and or trim as we go forward. And bonds and metals. Now, I didn't bring up metals, but gold and bonds are very much correlated. So really watching this market out of the bond market, like I had mentioned. Gold and silver still have a very small position. Hate to sell on a big down day today, but they might be the next to go. As always, thanks for watching. Michael Loftus, Wealth and Wisdom TV.